Howdy there, folks. Welcome into today's video. Oh man, we got some good stuff to talk about here today in this video. I got a lot I want to show you in regards to what's going on with specific stocks out there, the markets in general, my views on all this. But where I want to start it out today, hope you guys enjoy this as always. By the way, thank you for being subscribed. Thank you for joining me for this video. I want to start out with this chart. Somebody in the private Discord chat shared this essentially, and I just thought this was absolutely magnificent. And this shows you the bear markets and the bull markets, and essentially, let's just call it the power of these forces over time, okay? And this goes all the way back to the 1940s, all right? And, when you see it laid out like this, you really start to realize how absolutely ridiculous and silly it is that we freak out over these let's just call it bear markets, and these markets where the time periods when the market goes down essentially is so dang silly. But we absolutely freak out in these time periods, and it kind of shows you how let's just call it unintelligent, the human species, how much we really are, okay? And unfortunately, it's a little bit the way our brains are wired, unfortunately, why we get so screwed up in these situations. But when you look at it from this context, you realize how just absolutely silly and ridiculous it is that we even worry about these bear markets, about these crashing markets, and we all freak out about it when you realize I'll give you an analogy, okay? This is an analogy I have for you guys, okay? Picture you got a big T-Rex coming at you, and you also have a Chihuahua coming after you, okay? And it's the equivalent of being like, oh no, the Chihuahua's gonna bite me, oh boy, okay? And not worrying about the T-Rex coming after you, or let's say it's a massive alligator coming after you, and like the Chihuahua's biting your ankle, and you're like, ow, it hurts so bad, and meanwhile the alligator's coming behind you to eat your whole head off, okay? That's the equivalent of this. And we freak out over the Chihuahua, which the Chihuahua is always the bear markets, and we forget about the massive alligator, the T-Rex, that is essentially the bull markets that we go through over time. And I think a chart like this just really puts it in context of how absolutely silly it is that we freak out over the red markets, and we never forget what it is, the power of the other side, okay? The other side is the ocean, and the red part, that is a surfer in the ocean, okay? Let's just call it that, all right? Alrighty, so that's a good place to start the video. Now, let's talk about the state of the stock market as of right now. So the Nasdaq's down over 27% year to date. It has been absolutely an awful year for the Nasdaq. At this pace, I did the calculations, we're on pace to be down around 35% by the end of the year. If this continues, which it's, anybody's best guess, maybe we come back by the end of the year, maybe we go down more. But at this pace, we would finish the Nasdaq around 35% down for the year, roughly, okay? Now, for some context on this, if that was to happen, the trend that is going, if this was continue on and we're down about 35% by the end of the year, where does that put us, okay? So that would put us right about at Rona highs, okay? So, not Rona highs, but right prior to Rona happening, okay? Because if you go back to where the Nasdaq was February 10th of 2020, the Nasdaq was about 9,700 or so, okay, 9,700. So basically, if we were to go down to, let's call it 35% down for the year, we'd be right about at the Rona highs. Now, there's a lot of people that do want to see that happen, and they want to see us break new lows, and they want to see us go back to the previous Rona highs, I guess you can say, and they would feel more comfortable if that did happen. I've heard many folks definitely bring that up about, feeling a level of comfort and just kind of erasing everything that happened in Rona. Because if we got back down there, we would just have erased everything that went positive in the Rona time, which is something a lot of people want to do for whatever reason, okay? And although, obviously companies' revenues, and for a lot of companies, their net income is not just higher, but substantially higher than it was in 2019, a lot of people just feel like it's a level of comfort if we go back to that place, just in case companies' net incomes and their revenues erode over the next year back down to those sorts of levels prior to Rona, right? Now, it's a big question if that was to happen, right? But that's the way a lot of folks are kind of looking at it from this perspective, okay? Now, also for some context, if we were to be down 35% by the end of this year, How many times has this happened in NASDAQ history? And the fact is, it's only happened 3 times ever in history of the NASDAQ that have we gone and been 35% or more down for a year, okay? One was in 2008. We were down 40.5% in that particular year. One was the year 2000. We were down a little under 40% that particular year, 39%, okay? And the other time was 1974. 1974, we were down 35.11% for the NASDAQ. 3 times in the history of the NASDAQ has it ever been down 35% or more. So that's just some context of how rare a situation like this is in the markets. It is extremely, extremely rare in the market, okay? Now, along with the NASDAQ falling in the markets in general, we have something very interesting happening here, okay? The other risk on assets, let's call it that, such as Bitcoin, also continue to tank. Bitcoin's down another 4% plus here today. It's in the 18,000 range once again, and Bitcoin year to date is now down over 60% at this point. If the NASDAQ continues to weaken, Bitcoin will continue to weaken. This baby follows around the NASDAQ. If the NASDAQ starts going up, expect Bitcoin to go up. Bitcoin can sometimes act like a 2x or 3x leverage on like the Qs essentially. It's the way it kind of works. And, Bitcoin already had its massive fall. It doesn't mean it can't fall more. So that's just something to kind of keep in mind. Bitcoin topped at near 70,000 at the peak, and we're at 18,000 range here today, okay? So it's already had its massive fall, but it doesn't mean it can't fall a little bit more and go down to like the 15,000 range or something like that, okay? And, if you look at Ethereum, very kind of similar play out. Now, simultaneously, we have complete devastation still going on with the Wall Street bets type stocks, okay? We know the 3 most popular stocks on WSB. It's Bed Bath & Beyond, and that one just, had a bad day, okay? A bad day, let's just call it that. 18% down. GameStop down over 8% here today. AMC down, my favorite number. Maybe I should buy AMC. That's my favorite number, 777. Okay, that's a Vegas slot machine. Winner, winner, chicken dinner right there, okay? Down 7.77% here today. So these stocks have been absolutely wrecked, and they just continue to get wrecked more and more. And for a lot of folks out there in the market, they want to see these stocks just go to obliteration levels, which obliteration levels for AMC at least is $5 a share. For GME, it's like, $15 a share. And for BBBY, that might be out of business or something like that, okay? That's what they kind of want to see to feel like we've just erased everything of the FOMO cycle and the excitement cycle. We've just erased it. I could make an argument that these things have already been obliterated so much. It's like, they're already just been done. They've been finished, man. Like, what else do you want from these things? Like, come on, man. It's like, these are already down and out. It's like, whoa, what do we want here? Zeros? So, but that's the way the market's kind of looking at those, right? A couple of stocks somehow eked out gains today. The Chef somehow eked out a small gain. Tesla somehow eked out a gain on a day like today. And then Fubo of the retail stocks, that was the one that was a pretty big winner today at about a 7% move there. And we look a little deeper, right, into some other retail stocks. Now, the Bed Bath & Beyonds, the AMCs, the GMEs, there's nothing about the fundamentals of companies, okay? Let's be quite clear. We need to differentiate the SoFi stocks, the Palantir stocks, those type of retail stocks from those, Bed Bath & Beyonds, the AMCs, the GMEs, and those sorts of stocks, okay? There's a huge difference in the investor bases in those stocks and who's actually owning those stocks versus those other stocks, okay? For the stocks like the SoFis, the Palantirs, and things like that, although those are heavy retail stocks as well, they actually have fundamentals with the business models unlike those other 3 stocks, right? They actually have incredible growth. They actually have great long-term growth stories over the next 5-10 years, okay? And you look at something like a SoFi, this stock just continues to get obliterated day after day after day. This is back down to $5.65 at this stock now. We get a couple weekdays in the market this week, and the next thing you know, this will be at new all-time lows, which all-time low for SoFi was somewhere around, I think it was just under $5 or low 5, somewhere in there. And this stock has fallen, almost 64% year to date. It just can't get out of its own way, essentially. Palantir, same exact situation. Heavy retail stock, we all know that, which there's a lot of institutions buying into Palantir over the last number of quarters as well. So do keep that in mind. But it's still a heavy retail stock. The stock is down over 60% year to date. And never mind that, if you go back to where these stocks were at in 2021 at some point, it's more like 70-80% drops for these sorts of stocks. Okay, but these stocks have just been absolutely racked. Okay, as terms of the share price, but the fundamentals of these companies continue to get at least more attractive. The revenue continues to go up for these companies. They continue to attract more customers, and they're likely going to continue to make progress as far as their cash flow situation and their bottom lines as well over the next, let's just call it several quarters. So it's important to just keep in mind what's going on with the stock prices of these companies versus what's going on with the fundamentals of these companies. And if you can continue to grow your revenues, continue to grow the amount of customers you have, right? Continue to get your cash flow in a better place and continue to get your bottom line, your net income in a better place, there's a fairly high probability that over time that stock price will be reflected, right? And if the stock price continues to go lower while the fundamentals are continuing to get better, as an investor, as a general rule, that's a great buying opportunity because that usually doesn't work out. Usually if the fundamentals of the company are getting better, the stock price is simultaneously going up. That is not the situation for a lot of companies in the market over the past, let's call it 1 to 2 years essentially, where some of these companies' fundamentals have gotten better, more exciting, more revenues, more profits, more whatever, right? Meanwhile, their stocks are going down, 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 down. So it's just kind of something to kind of keep in mind there, but it definitely shows you a level of devastation in the market, okay? This is completely random, but I know I did a Fubo video recently, and a lot of folks were wondering kind of how many shares I own in that one. Not a lot, okay? And the reason being is I already own probably too many unprofitable companies, and it's just another one. Now, to be fair, a lot of my unprofitable companies are going to start to turn to some profitable quarters in 2023, so they're like on the pace of getting there versus a Fubo that's not going to be there. Fubo best case scenario is maybe they eke out a profitable quarter, a cash flow positive quarter in 2024, but it's probably more 2025. So I can't own a lot of this one, 17,777 shares of this one, and that's, I might buy a little more, but like I said, I already own several different unprofitable companies, and it's like, how many do I want to own here, okay? Now, we have something very important coming up here. Very, very important, okay? And I want to explain why this is so important for not just this particular stock, but this is important for what's about to happen to the S&P 500 and the NASDAQ as well, okay? Basically, what is going on tomorrow is Apple is going to show off their new products, okay? Now, something to keep in mind, usually when Apple shows off their new products, what I've seen many times is the stock price actually falls after they show off their new products, okay? And so it is likely that Apple's going to show off 4 new iPhones tomorrow, potentially a new Apple Watch and some accessories and things like that, okay? And so that's going to be a lot of attention in not just the technology space tomorrow and then the following day, but also in the stock market in general, because Apple is the biggest company in the world. If they're going to show off their new products that are the cash flow machines, which the iPhone is the cash flow machine for Apple, right? This is an important thing that's about to happen in the market, okay? And we have some issues that are definitely in front of us in going into this big day for Apple. Let's just call it that, okay? So the first thing we got to understand is if you're looking at the weight of the S&P 500, Apple is by far and away the biggest weight of the S&P 500, okay? I mean, we're talking about in regards to Apple, it's 7.24% of the weight for the S&P 500. So if Apple stock price is going down, it's likely bringing down the entire market. That's just the way it works, okay? That's for S&P 500. For the NASDAQ 100, Apple is a shocking 13.6% of the weight of the NASDAQ 100, okay? So basically what this means is if Apple stock price is going down, it's bringing down the S&P 500, which is the main index, and it's bringing down the Qs in the NASDAQ in general, if Apple stock price is to falter and is to fall, okay? Now, going into this day, essentially, Apple's in a not the best position. Let's just put it that way, okay? Here's the deal on a valuation basis. When we were going into Apple showing off their new products in 2017, go back to September 2017, Apple was trading at a PE ratio of about 18 versus today, Apple trades at a PE ratio of about 25, okay? Apple, when those products were shown off in 2017, was trading at about a price to sales ratio of 3.7 versus a price to sales ratio right now of 6.4, okay? So this basically means that Apple is pricing in a lot of good news. And this also makes Apple a very big risk to the entire stock market when you're talking about it used to trade at this and now it's trading way up here. Oh boy, okay. Oh boy. But that's 2017. Maybe 2017 was a freakish year, right? Maybe that was a one-off year. Well, why don't we go ahead and we look at what happened in 2018 for Apple stock going into them showing off their products in 2018, okay? Well, in September 2018, going into them showing off their products, then Apple traded at a PE ratio of 20 versus right now it's a PE ratio of 25, okay? It traded at a price to sales ratio of 4.2 versus right now it's 6.4, all right? So once again, we're in a very, let's call it, not ideal situation here where we're trading way above where we were trading at when they were going to show off their products in 2018. But maybe 2017 and 2018 were freak years. Well, why don't we go ahead and look at 2019? All right, we can pull that up, okay? Going into showing off their products in 2019, we go back to September 2019, the company was trading at an 18.6 P ratio. And now it trades at a 25. It was trading at a 3.8 price to sales ratio, and now it's trading at a 6.4, okay? So this goes to show you how big of a risk Apple is going into this day in which they're about to show off their products, that we are trading at valuations that this company just doesn't usually trade at, other than the kind of Rona, the freak time, okay? Usually going into these product launches, we're at a P ratio of 18 to 20, and we're way above that. And not only that, I think there's a real risk that Apple's revenues are going negative next year. We'll see what happens. I hope it doesn't happen, but there's a real risk. I think it's a legit risk. And I own several semiconductor companies that do significant business with Apple. I own Qualcomm, I own Skyworks Solutions, and I don't think I own Cruzy Doozy anymore. But anyways, those two companies get significant amounts of their revenue, especially Skyworks Solutions, from Apple. So if there's a guy that should root for Apple, it would obviously be me, right? But I do not have a good feeling, unless Apple shocks the world tomorrow, which probably isn't happening, that Apple's revenues could go potentially negative for that company in 2023. Let's just call it that. And now it's a bad setup for the market. If we're talking about these products are, let's call it a little disappointing tomorrow, right? They're going to have to do something to almost like shock people to get any excitement around this. You can't just come out with your phone's going to work a little faster and the camera's going to be a little better and the screen might be a little more clear than it was before, because that's the same stuff they do every year. And, when it's okay if your stock's trading at, let's call it lower valuations, but when you're trading at kind of sky high prices, that's when people start saying, oh boy, okay. And then also folks are worrying about the state of the consumer with everything that's going on with inflation. And it's not the best setup for Apple. It's a bad setup actually going into this whole situation, okay? Very bad setup. Now, to track it back to where we started this video, if we're going to talk about this potential of a 35% down year for the NASDAQ, how do we get there? Apple is exactly how we get there if that was to play out. If that's to play out, it will have been Apple that took us there essentially, okay, and took us down to those prices. Now, do keep in mind, if Apple was to take us there and the market was to drop, all stocks are going to fall more in that sort of scenario. Some will fall harder than others because some stocks have already been devastated so much that it's hard to get any more selling pressure in some of those stocks. And that's why we see a lot of the smaller cap stocks, right? A lot of those stocks that have already been obliterated, they're not hitting new lows. And it's like, why are a lot of those stocks not hitting new lows and new lows like they were, let's say, prior, right? And the reason being is they've just been so obliterated that, they've ran out of sellers in some of those stocks. And that's why even on some of these down days, you see some of these stocks actually go up. And it's like, how is this stock going up on a day that's a down day for the market and where a ton of other stocks are getting obliterated, right? It's because there's, basically they've run out of sellers at that point in time for some of these stocks. And you're starting to get just a few people that are starting to position. And we're literally in like the pregame warm up of this. We're not even in the first inning. We're in the pregame warm-up of people starting to position for the next bull market, okay? We'll probably be in the first inning in about a month or two from now, and it'll be in the second inning at the beginning of 2023. And that's what I call the positioning for the bull market. So we're in the pregame stage right now, and that's why some of those stocks are having trouble hitting new 52-week lows and why they're, just staying up decent. Let's just call it that, okay? But that really comes down to the companies that have the exciting business models over the next 5-10 years. If they're going to look at it from the speculative trader stocks and some of that WSB stuff, they're not going to be attracted to those sort of stocks because they don't have the long-term exciting story. Let's just call it that, okay? So Apple is, if we're going to do this thing, it's going to be led by Apple. Let's do keep that in mind. Hope you guys enjoyed this video. As always, I appreciate everybody joining me. If you ever want to say hi to me and send me a message that you enjoy the videos or whatever, or just say anything, feel free to send me a DM on the gram, and I might get back to you and say hello as well. So much love as always, and have a great day.